The Morpheus crypto swing trading strategy focuses on individual altcoins that are showing relative strength to Bitcoin and Ethereum. We typically do not trade Bitcoin itself very frequently unless there is a clear setup and a clear trend. We typically focus on altcoins. But if that's the case, why do we focus every video on talking about Bitcoin? Because every altcoin is paired with Bitcoin as a currency pair. Therefore, it's very difficult for the altcoin market to move higher if Bitcoin is moving lower. So we analyze Bitcoin just to give you kind of a bird's eye view of the overall health of the market. And then we sometimes dive into Ethereum as well, which kind of further defines the health of the altcoin market. So that being said, let's go ahead and dive in and take a look at Bitcoin. In our last video, where we looked at the support and resistance levels of Bitcoin, we highlighted the April lows and the March lows as prior support levels. Now, this was on May 8th. And back then, it was actually, we were still trading above these levels. We said that based on the moving average crossover, we were likely to see a test of those prior lows. And that's exactly what we saw here. We came into a test yesterday of the lows from late April, broke below that. And now we're currently testing the lows from late March. These are the same levels that we highlighted 4 days ago in our May 8th video. And as you can see right now, Bitcoin is currently trying to hold the horizontal price support of this prior low from March. If it does hold, then of course we could see a short-term bounce. But as we mentioned before, don't expect too much in the way of a bounce because we now have overhead resistance of the 10, the 20, and the 50-day moving average. And by the way, we talked also on May 8th about how the moving averages were about to cross over, and that's what's happened now. Before, notice how we had the fast moving average on top, the 10, and then the 20, and then the 50. In an uptrending market, that's what you want to see, is moving averages stacked from fastest to slowest. But once the trend reverses, now you see the opposite. Notice now we have the 10-day moving average on the bottom, then the 20, then the 50. They're stacked from slowest to fastest, and that actually is a sign. It's a bearish signal of a new downtrend starting. Now, we actually would determine if we have a new downtrend starting based on where this next bounce takes us. If we get a bounce here off these prior lows, we most likely will form a lower high than these prior highs, and then that's going to start a new downtrend when we start a lower high and then possibly come down and set a lower low. Now, of course, the other scenario is that we could just hold this level and consolidate and chop around in a sideways range for a while, more of a correction by time as opposed to a correction by price. But as we know, range-bound and choppy markets are no fun. So quite honestly, we'd rather see a trend, even if it's a downtrend, which makes it much better for swing trading. Now, if these prior lows don't hold, if this current level that's being tested does not hold, remember that we've got support of the 20-week moving average. Let's go ahead and take a look at the weekly chart. So if we zoom out to the longer-term weekly time frame, we can see that Bitcoin has now definitively broken below the 10-week moving average, which pretty much was lined up with the 50-day moving average. However, we are coming into support soon of the rising 20-week moving average. Currently, the 20-week moving average is at 24,620. And you can see here back in late February, early March, we had first week of March, we had a test of the 20-week moving average, which led to a bullish reversal candle. We reversed off that level, and then we continued higher. So before we're going to see any significant buying interest, we could need to first see a test of this 20-week moving average. We might see some short-term bounces in the meantime, but what would really be compelling is if this price comes to meet the 20-week moving average. Now, notice also that we've got horizontal price support of these prior highs from August of last year and also from February of this year, which are currently converging with the 20-week moving average. So that makes for a pretty significant support level right around 24,600. So again, just to recap, if we look at the daily chart, if we do hold the current levels, then we could see a short-term bounce that could take us up to these moving averages. But really the main support that we're looking at is on the weekly chart around 24,600. As usual, we've been focused on finding individual altcoins that are showing relative strength to the market right now, but there's just not much out there. So we can't force the trades. We got to wait for the market to come to us. But let's take a look at the three altcoins that we did have on our relative strength watch list earlier this week that we've previously mentioned in our video. The first one we talked about was UMA, UMA. And when we first looked at this back on May 8th, in our May 8th video, we actually were seeing pretty high relative strength. The price action was holding, the chart looked something like this. Price action was holding near the highs above the 10, the 20, and the 50-day moving average, confirmed by high volume on the breakout. So this was one of the few altcoins that was actually still holding above all its key moving averages. But if we see the current price action, yesterday we tried to bounce off the 10-day moving average and failed to hold and broke below it. So it looks like the price is going to come all the way back down to the 20-day moving average with a lot of overhead resistance. So we want to keep an eye on UMA in terms of our relative strength watch list, but there's a lot of overhead now in the fact that it didn't hold the 10-day moving average. Nevertheless, we'll keep an eye on UMA. Next, let's take a look at EDU. EDU is another crypto that's been on our relative strength watch list this week. And actually, we see 2 days ago when we got a slight bounce in the market, EDU actually rallied sharply back above its 10-day moving average. However, the price action failed to hold and drifted back down. Nevertheless, we are in the process of forming a higher low. As long as the current lows of today hold, then we're going to form a higher low. And there's not a lot of price history here because EDU is a recent ICO, but that's a good thing. It means there's not much overhead supply from people trapped at higher price levels. So at this point, EDU remains on our relative strength watch list as one of the stronger cryptos in the market as long as these prior lows hold. RAD was a previous relative strength leader during the bull run. In fact, back in April, it rallied from about $1.50 all the way up to a high of over $6, so about a 400% jump in just several weeks. Now, this has been straight down since then. There was no bounce off the 10-day moving average, and even the 20-day moving average tried to hold above it and couldn't. But now the price is trying to hold at the 50-day moving average, and this is a key level. If this 50-day moving average holds, it's that's a positive sign. However, notice that because the price got extended so quickly, this is actually a retracement all the way back down to the prior range, right? So the entire rally has been given back. So even though we're at the 50-day moving average, this is not really something that we're interested in at this point. So we're going to go ahead and remove RAD from our relative strength watch list because it failed to hold at the 20-day moving average. Next, let's take a look at RNDR. RNDR was a relative strength leader during the prior bull run. It has pulled back. It's currently trying to hold its 50-day moving average, but what we're looking at right here is the weekly chart. And we notice on the weekly chart with the correction in the market, it has pulled back from its highs. However, notice it's still holding above the 10-week moving average. That's important because not a lot of the crypto market is holding above its 10-week moving average, but RNDR is. And it's also holding right at support of the prior highs from its prior base breakout. So RNDR could be one of the cryptos that is the first to go back to new highs once the market starts to catch a bid again. So for now, no play, but definitely RNDR remains on our radar. Finally, let's take a look at SXP. SXP was also another former leader during the previous bull run, rallied nearly 400% in just 1 week from about 25 cents up to nearly $1 back in late March. Now, of course, it's in correction mode since then. That was quite a massive rally. And there's a lot of overhead resistance. We've got the 10, the 20, and the 50-day moving averages. However, SXP has strong fundamentals and was a former leader. So if we see a tradable bounce in the overall market, SXP could be in play. Notice today it finally is starting to get a reversal attempt. We have a strong volume, and we did have a rally earlier today, a bit higher. It didn't hold up, and it's sold off a bit, but we could easily see another test of this intraday high. Now, notice that we've got a downtrend line here from the highs, which is in yellow. That's converging perfectly with the 10-day moving average, the green line, right around the 48-cent level currently. Now, of course, with the moving average and the trend line moving lower, that number could change, but currently right around 48 cents. So if we get a break above this downtrend line and 10-day moving average convergence, then that's a potential swing trade setup for a bounce, for a quick bounce, especially if it's confirmed by high volume. So that's what we've got for you for today. Not a whole lot going on in the altcoin market yet, but as usual, we will keep all of our members updated in the chat room every day. So check in over the weekend. We're also looking at the market over the weekend, and we'll be back on Monday with our next crypto video. In the meantime, stay safe and remember to always use stops and trade what you see, not what you think.